Hey guys, welcome back. Now, there are now many people waiting on the sidelines for crypto to make its next big move up. However, what if all of this is just one big bull market trap and just giving enough of a run for the bulls to get excited before everything begins to roll over, and we don't just test the previous bottom, we do in fact go lower? And if Bitcoin were to break below $15,000, this would certainly be a crushing blow to all the bulls. Now, as Ark Invest have just released their latest crypto analysis, there was some very interesting findings. And so in this video, we'll be covering the biggest takeaways, including the on-chain data, which seems to indicate that the worst has actually already passed. Then the two key price levels that everyone needs to be paying attention to right now. And then we'll finish with some concerning data that indicates that all of this just could be the mother of all bull market traps. Okay, so first up, we'll start with the good news, as the on-chain data suggests that the worst is now behind us, and the two key price levels that we need to be keeping an eye on. Okay, so starting with the good news, three charts that indicate that the worst is behind us and we are on to the bull market. And firstly, we're looking at the Bitcoin realized cap drawdown from its all-time high. So using the realized cap, and these are the big drawdowns. Again, that happen roughly every 4 years, going back to 2011. So in black, this is just the price in the background, and this is the percentage drawdown. So obviously this one was the most severe and it broke over 20%. Then the next one, it broke just over 15%. Third one almost got to 20%. And as you can see, the one that we've just gone through, not only has it been very severe, but also the duration. It's been extremely long as well. So this would indicate to me, looking at what previously has happened, the severity and the length, I would say that the worst is now behind us. But remember, this is just probabilities, but this is how I would read this chart. Then the second one, and we're going to try and gather some insights from the stable coin market. And this is the market cap 90-day as a percentage change. In green, this is people putting money into stable coins, and then in red, this is people taking money out of stable coins. So this is your dry powder, and they're keeping it in crypto. They haven't just gone to dollars. And again, what is this data saying? Well, if we go away and actually take the actual market cap of the stable coins, this is what you get. So this is TVL, so not looking at this right now, and this is the market cap of the stable coins. So you can see people putting money into stable coins, and it got to almost $200 billion. And it's at this pivotal point here, and this is what Ark Invest was showing as well. This is people selling their stable coins, and really this is only done for two reasons. Now, people could actually need the money and they're taking money out of the cryptoverse, but also a big chunk of this money is people buying back into actual crypto. And if prices have gone up and it's predominantly been Bitcoin, then I would say this is money going back into Bitcoin predominantly. Dollar cost averaging back into the crypto market, which is what I think is happening here. Again, this is bullish and signals the turning point has already happened. And then finally, two key price points to keep an eye on is Bitcoin's 200-week moving average and the realized price. And realized price is basically what the market has paid for their Bitcoin. So in black is Bitcoin's price. Then this purple line is this 200-week moving average, which you can see doesn't really get broken that often. This clearly showed an excellent time to buy, indicating the market bottom. And right now we're flirting around this price, and it currently sits at 27,500. So it's just broken below again. So this is a major line that's just been broken. However, the realized price, and this is now major support, and this currently sits at around $20,000. So this really is a key critical price in crypto. And if you notice, it was also the previous all-time high. So something really drastic has to happen for prices to drop below this level. Now, all things being equal, I would say the worst is now behind us. However, we're now going to move on to why this could all be just one big bull market trap. So let me just quickly set the scene. Right now, we have had this crazy rate hike cycle, and now interest rates, the highest they've been for a very long time. And this is something that crypto has never had to deal with. Then add to this the money supply, and ever since crypto came along, money and the money printer has been pumping money into the system, which is really good for asset prices, especially risk assets. Obviously, with what happened in COVID, it went into overdrive, and crypto prices also went into overdrive. But more recently, due to inflation, money is now being pulled out of the system. And again, this is something that crypto has never had to deal with. Now back to Ark Invest slides, and the last 3 slides showing a warning. The first one has to do with jobs and the non-farm payrolls that come out. Now, what's concerning about this is that it smells a little bit like manipulation coming from the government. Now, I would say I'm a naturally skeptical person, and for good reason. The amount of times I see data being manipulated, and so check out what's going on with non-farm payrolls. Now, if you're a hardened crypto investor, you may take a look when these first get released at what is going on with employment. A lot of people don't, but some people do. Now, did you know that these actually get revised down at a later point? So most people are going to be taking a look at what this was, but very, very few people a few weeks later, a few months later, when these get revised down, nobody really pays attention. Obviously, apart from the smart money. But did you know this has been revised down for the 6th consecutive time? And for me, this is very, very shady. They put out a much higher number when everybody's watching, and then later on, they just keep revising it down to what is actually going on. So I would say this is a bit dodgy behavior, and Ark also says it's bearish. Number 2, and this is the difference they're highlighting between real GDP and GDI. So gross domestic product and gross domestic income. And essentially, it's 2 sides of the same coin. The GDI, this is the income made from all the goods and services, and GDP is just looking at products and services sold. So it really should be the exact same figure, but due to reporting, sometimes things lags. If you get a slight different date of when things finalize, you get this slight deviation. And what they're pointing out right now is that the deviation right now is the highest it's ever been. And this goes back to 1948. So what is this saying? It's saying that GDP has been massively overstated. Again, the government and the Fed putting out that GDP is a lot higher than it actually is. Again, very shady reporting. And then number 3 and final slide, this is what's going on with retail sales. And as you can see, from January 2022, we have department stores, we have discount stores, and the total. And obviously, a very clear downtrend in retail sales, which is why inflation has been falling. However, Ark Invest said that this is very deflationary, but because of this spike at the end, I would actually say the opposite. And when we grab the data from Trueflation, you can see what's going on. So people spending less is deflationary, and as you can see, US inflation almost at 10%, and it has been coming right down. It bottomed here, but you can see there's also a jump up recently, and this is sticky inflation and starting to go back up. When people begin spending again, spending is a key part of inflation, and so this indicates to me that the next inflation numbers are going to be higher. And for those interested, this is what's going on in the UK right now. The UK is getting crushed, and our actual inflation rate, not what was reported by the government, almost hit 22%. Now, again, the trend is down, but we're still sitting at 11% inflation. So everybody is getting squeezed right now in the UK. Now, what makes this such a difficult time to navigate is that all things being equal, the worst of the crypto winter would be now behind us, and we would be on to the next big bull market. However, the big unknown is something that crypto has not had to deal with, and that is major headwinds in the bigger economy. Crypto hasn't had to deal with super high interest rates. Crypto hasn't had to deal with high inflation. And crypto hasn't had to deal with not just the money printer being turned off, but the central bank actively pulling money out of the system. And this is currently the big unknown, and how are risk assets going to perform in that environment is really up for debate. Meaning this whole thing could be just one big bull market trap. And so the rest of the year really is a critical time for investors. Make sure you have some dry powder on the sidelines in case we get a mega sale. And always remember, one of the biggest parts of investing is protecting the downside. So there you are, guys. Hope you enjoyed. Now tell me, what do you think about this latest Ark Invest report? Let me know below. But just remember, to get rid of 100% of the comment spam and trading bots, we are now using the SuperThanks Commenting system. So to make sure to get your question or comment read and replied to, or just to say thanks, use SuperThanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.